Today I'm going to share with you the one time frame trade setup using the supply and demand trading strategy. This is an easy to follow, high probability trade setup that I'm going to share with you. In fact, this is one of the exact trading setups that we use in the Moneyball trading program that is helping traders become consistently profitable. Now, if you are brand new to this supply and demand trading, I am going to leave a tips playlist in the description below so you can get access to all these videos talking about the full course of supply and demand, covering everything that you need to know, as well as an ebook talking about this exact setup and multiple time frame analysis on trading supply and demand. That's all going to be in the link below. So go ahead. I appreciate if you guys like this video right away, subscribe, and if you guys have any questions, let me know in the comments below, and you can always reach out to me on social media at Moneyball Austin. Let's get into it. So this one time frame trade setup was created by traders in the Moneyball trading program that came to me complaining about how they have these really good trade setups on their entry time frame, but they can't take it because it's not located inside a higher time frame supply or demand zone. That's called the multiple time frame analysis setup. I will have links below as well to that exact video so that you can go off and trade that. So they were coming to me saying, hey, I really like this trade. I really want to take it, but I can't because it's not located inside a higher time frame zone. So I came to the conclusion, I thought, let me take this to the back testing meetings that we have, as well as back test it on my own. And in fact, I actually uploaded a video on that. I will actually, if you want to see the origin of how we created that, I will have that in the description as well. And I was coming across these really good results, just ignoring completely the higher time frame, not needing price inside a higher time frame supply or demand zone, but straight up just trading the one time frame. All right, it takes a lot of guesswork because people are changing from the higher time frame to a smaller time frame and then to another smaller time frame. It was just too much information overload, too much confusion. So that's why we removed completely the higher time frame and just focused on one time frame. And that's why we call it the one time frame trade setup. Now, sure, there are certain things. The only time, this is a very important rule, we still need to use a higher time frame because we need to make sure that we are trading with the trend. We do not take one time frame trade setups trading against the higher time frame trend. I will repeat that because that is hands down the most important rule to this. We do not trade counter trend. We need to make sure that we are trading with at least the general direction of the market on the higher time frame. So in this case, we have USD CAD. If I asked you, what is the trend? It's probably not down. You're going to sit here and say it's in an uptrend. We're creating higher highs, higher lows. It's been going up for the last month nonstop. So clearly it's in an uptrend. I agree. So we want to be looking for buying opportunities, not selling, but buying opportunities. So that's my higher time frame. Because I know people are going to ask me what's the best time frame, what time frame sequences should I use, I will just pop it on the screen right now and show you those are the time frames I just generally recommend for different time frame sequences. Have a higher time frame and have a lower time frame. So in this case, we're looking at the 4-hour time frame and we're in an uptrend. So that's definitely telling me that I want to be looking for buy setups. Okay. So now I'm going to go down to like a 30-minute or 15-minute, and I want to be looking for strong quality zones. All right. And you're going to notice a couple things. I've done many videos on this before talking about what makes a good quality zone. Number one, the imbalance. We need to make sure that the imbalance, the whole concept of supply and demand, is that we are looking for strong imbalances. If we understand that 99% of the liquidity is made from these big institutions, we want to locate where they're making these big moves from. And when prices return back into these areas, we want to be looking for buys or sells. That's the whole theory of supply and demand. Okay? So number one, we want to make sure that we're trading with the higher time frame trend. In this case, 4-hour time frame, we are in an uptrend. We're going to go through many examples because that's how people learn. They learn through physical examples, okay? So higher time frame uptrend, we're going down to like a 30-minute. And at this case, what I need to see, in fact, I'm going to draw this out. If we want to be looking for buy setups, this is what I need prices to do. I need prices to go up like this and have a very short term lower low, lower high. I'm looking at this right here. All right, because we need prices to break a very short term lower low, lower high, have a strong imbalance, and remove opposing pivot point zones. All right, it's going to be removing pivot point zones, breaking trend lines, and creating strong zones. So that is our demand zone that we are looking to buy the pullback into if and when prices return back into that area. In fact, I should probably just be using this. It's a lot clearer. So if we have uptrend like this, we want to see a kind of short-term lower low, lower high, and then price pushing back up to the upside where it breaks a short-term downward trend line like this and removes an opposing pivot point zones. Opposing pivot point zones. That's what I need to see. That is what I need to see. And I need to see strong quality zones being created. What's a strong quality zone? I will have those videos for you. Those are very important videos. But we need strong 2-to-1 imbalances. We need momentum breaks. We need opposing pivot point zones being removed. And we need to be trading with the trend. So like those 3-4 things. So in this case, we have a, like we said, higher time frame uptrend. And then we have this short term right over here. This was a buy setup. I didn't take it, but it was on my watch list. I'm not really focusing on the currencies right now. I'm focused more on the commodities. And we have this short term lower low, lower high with a very strong explosive move to the upside. Okay? That's the zone that we are looking to buy back into when prices return. Okay? What we don't want to do, because this is a great example of a zone that's a really good 1 hour zone, in this case 30 minutes. This supply zone right here is a very good supply zone. It broke upward trend line like that. It broke upward trend line. It removed this opposing pivot point zone, this demand zone, and it's a very strong quality imbalance. But we wouldn't short at it. Why? Number one, it's not located inside higher time frame zone, higher time frame supply, and number two, we're trading counter trend. Like the 4 hour time frame is like this. Why would we want to be shorting this thing if we're not inside a higher time frame supply zone? So we're in an uptrend. We want to be looking for buying opportunities. We don't want to be selling. Okay, so that's what we want to do. And so when we look at markets like this, we're going to go through a couple other ones like Aussie Swiss. It's daily, just nonstop down. 4 hour, nonstop down. 1 hour, not everything's down. So we should be trying to short every type of short-term higher high, higher low structure pivot point zones being removed. Like I said, this. So if we have prices in a downtrend, we're just going down to a lower time frame and we're looking for a short-term higher high, higher low that breaks that pivot point, removes opposing zones like that, and we have a strong quality zone up here, a supply zone. Okay, if you're like, hey, I don't really know how to identify and draw zones, boom, that tips playlist, the full course, hour and a half long video, you're going to learn how to identify and draw zones. There's updated videos as well covering this. So it's all that great information is going to be there in that tips video playlist, as well as in the ebook that's going to be in the description below for you. So we're trying to trade out the base and highlight the base. And you might be asking yourself, what about take profits, all that? We will get to that. But we need to go through a couple other examples. One of the trades that we can look at, this was gold, 5 minutes. This is not a properly journal trade, but I do have it over here. So gold, 15 minutes. So if we go to gold and we look at, say, like the 4 hour time frame, where's gold? Gold. This is what the 4 hour time frame looks like. What do you think? Are you looking for buys or sells? If we're looking for the one time frame setup, guys, we're looking for selling opportunities. We're just trying to join the trend, take some shorts. Okay. We went down to a 15-minute time frame then at that point. So we go back here to the 15-minute. We know it's in a downtrend in general. Okay, so we want to be looking for selling opportunities. And here we have this short term, higher high, higher low. Okay, short term, higher high, higher low. We break that upward momentum. We remove that opposing pivot point zone. And that's the zone that we are trading at when prices come back into it. higher time frame downtrend. Lower time frame, we have the break and upward trend line. We remove the opposing pivot point zone, and we have a very strong imbalance to the downside. Okay, those are four of the most important things. Another very important thing is you're going to notice every zone that I am trading at, they are rally-based drops or drop-based rallies. They are not continuation patterns. They are not drop-based drops, okay, or rally-based rallies. Statistically, I'm surprised not everybody talks about this. If anybody tells you otherwise, I think they're lying to you, in my opinion. These patterns, the rally-based drops and drop-based rallies, perform a lot better than the continuation patterns. Okay, this is through thousands and thousands of trade reviews and over 8 years of experience. I can just tell you, these patterns perform a lot better than the continuation patterns. So if we continue, Euro New Zealand, this is another one that was on the watch list this week. If we go to, say, the daily time frame, what are we doing, guys? We're in an uptrend. So we can continue to look for buying opportunities on smaller time frame, as long as we're not sitting inside an opposing higher time frame supply zone, right? So in this case, we're in a heavy uptrend. 4-hour time frame, we're in a heavy uptrend. 1-hour time frame, now we're thinking about our entry time frame here. So we got this short term, lower low, lower high, lower low, lower high. Do I have to draw it out? So we're trending all the way up. We got the short term, lower low, lower high. Very explosive move to the upside. Has this been what I've been drawing? I've always been going like this, right? We want to see like that, like a short term like that, reversal, short term like that, reversal, right? That's what we have right here. And this is the zone that you should be trading at the drop-based rally demand zone, okay? And you'll notice, look at this, guys, imbalance, okay? Very strong move to the upside. I'm not trading at this zone over here. We don't have a lower low, lower high. There is a complete difference between what this looks like right now on the chart for this demand versus how we're making lower low, lower high, okay? Yeah, it's a good zone and all that, but I don't recommend just buying it straight up, okay? And if you guys have any questions or you guys want me to look at your trade reviews, I have no problem looking at your trade reviews. Just make sure I can actually understand what you're trying to do, and you send me that message. It's no problem at all. So let's have another look. So we're actually going to look at one of the trades. This is a trade that Nubs took, and I think he just lost on this trade. We looked at this. This is New Zealand Swiss. I don't think we looked at it. But we see here on the daily time frame, it's just a non-stop downtrend, okay? So what do we want to be doing? We want to be looking for selling opportunities. We went down to his lower time frame, and he has a short-term higher high, higher low. Higher high, higher low. Very strong imbalance to the downside that broke momentum, removed pivot points, and we have a strong quality rally-based drop supply zone up there. Now, it looks like he just got tagged out on this short, New Zealand Swiss. Yeah, because after it tagged him out, it actually just continued in this direction. So, hey, that happens sometimes, right? Sometimes you just get stopped out by a little bit and then it reverses and it goes off in your take profits. What's important is that you journal these trades so that you can review to see after 50 trades, should I be widening my stop or making my stop tighter? Okay. Now, you guys might have questions regarding take profit. I have uploaded a video. I will also have that in the description below of how to actually take profits. What's the best way? There are multiple different ways, and this is a whole other conversation, and that's why I've uploaded different videos on it. But what I would recommend is first getting very technical at it and just getting out, not technical, but mechanical. Getting out at a 1-to-1, or not a 1-to-1, get out at a 2-to-1 every single time. And then after 20, 30 trades, review to see, okay, what would have happened if I went for 3-to-1 or 4-to-1? How does that affect my win-loss percentage? Do I make more? Do I lose more? Right? This is why journaling your trades, and this is why I like talking about journaling, because if you come to me and you're like, hey, I took 20 trades of this one time frame trade setup, which I have no problem. If you guys do this and you guys come to me, I have no problem. And I have bad results. Can you please help me? I go, great. Send me your last 20 trades. And you're like, I can't do that because I didn't journal my trades. I didn't take a picture. I was like, I can't help you. I don't know where you're going wrong, right? So that's why it's important to journal your trades. All the best athletes do it. If you watch sports, they watch film. They watch film from their previous game and their next opponents who they're about to go with, right? They're preparing for the next trade. They're reviewing their game film of what went wrong and how to get better. Okay? It's a never ending process. And so if you guys have any questions on this setup or the methodology in general, just ask right now down below in the comments so that I can address any follow-up questions or questions that you may have about this setup or trading in general, okay? So if this has been any help to you so far, I really appreciate if you guys like the video. It's a very powerful setup when used correct and consistently. So I appreciate if you guys like the video, subscribe, and those tips playlists covering the whole methodology are going to be in the description below. And any video I did mention and the ebook as well for those that go through the Moneyball Trading Masterclass completely for free. Okay, I will see you guys later. Thank you guys so much and have a great time. Bye bye. Cheers.